Welcome back to Learn SKN, and today we're going to continue or finish looking at the May-June 2013 Unit 1, Paper 1 for MOB. So that's the May-June 2013 Unit 1, Paper 1 for MOB. And so with this one, we would have completed the Unit 1, Paper 2 for 2013 and the Unit 1, Paper 1 for 2013. But before we jump into it, let's just go ahead and like the video, subscribe to the channel, and hit the notification bell so we know when Learn SKN drops another video. Alright, so we cut off at 22 last time. So we're going from 23 all the way up to the end 45. So let's just jump into it one time. Which of the following represents the idea that an organization is a system, but at the same time part of a larger system? And so we have the answer here selected as open system. Why? Because an open system in the textbook is one that has interactions with its external environment. So what they're saying is that yes, the business is a system unto itself, but it also interacts with other systems out there. For example, you have a system as a business. There's also a system for your suppliers. There's also a system for your competitors. The government is out there, society is out there. You have to interact with all of these other systems, and so open system is the best answer right there. 24. When employees are allowed to develop, carry out plans with high levels of effort, they are applying Fayol's principle of, and the answer here is A, initiative. And so the answer we chose was A, initiative. And here in the textbook, it's outlined right here. Initiative. Workers should be encouraged to generate ideas and develop plans that will benefit the organization. This will also help employees to develop their personal skills and abilities. And all those are under the 14 principles of management that Fayol put forth. And so that's the answer right there. Initiative, because they say here, when employees are allowed to develop and carry out plans with high levels of effort, they are applying, and it's initiative right there. 25. Which of the following types of communication is illustrated by the grapevine? And of course, we know what the grapevine is. Hearsay, bird pick you in your ear, that kind of thing. And so the grapevine is a type of informal communication. As the name suggests, the news or the information moves along the vine literally, right? It starts from one person to the next, to the next, to the next. So you heard it through the grapevine. There's a song like that. I heard it through the grapevine. Yes. Okay, good. So the grapevine would be informal. 26. Upward communication occurs when, so that's from employees to bosses. So you go up from the lower end all the way to the top end. And so it occurs when employees are allowed to express their views. When the employees, so they would be considered the bottom of the food chain or the bottom of the chart, when they are allowed to express their views, then that's communication going upwards. So they are speaking to the supervisor, the manager, the bosses, all those persons. All the other ones, their instructions are given to, no, that's going down. Objectives are communicated to, that's going down. Members of staff coordinate tasks within the departments. That's across. That's parallel, right? So the best answer is B. When employees get to be a part of, express their views and might be a part of the decision-making process, that's a communication going upwards. 27. When management attempts to increase the scope of a job by broadening or deepening the task undertaken by a worker, this can best be described as, and you have A, job rotation, B, job analysis, C, job enlargement, or D, job enhancement. And the answer here is C, because for sure there's no job enhancement in the literature that refers to this kind of thing. It's more job enlargement. And in the textbook you have them outlined here. You have job enlargement when workers are given more than one task to perform at the same level of skill and responsibility. Then you have job enrichment. The workers' tasks are improved upon to make them more interesting and satisfying. Workers are also given more responsibility and recognition. And job rotation, workers get the chance to work in different positions throughout the business, doing different tasks before being moved to another task. And that one is literal. So we have job enlargement because there's no job. It's not job rotation. Job analysis is not a thing like that. And there is also no job enhancement within this particular topic, right? We're looking at motivation and things like that, and there's no job enhancement for that one. It's enrichment or enlargement, and the only option is enlargement, and it's a broaden or deepen the task undertaken by the worker. Now this almost sounds like job enrichment, right? When it's an improve upon the task, but since it's not an option, we go with job enlargement, where workers are given more than one task to perform, so that's the broadening of the task, right? There's broadening. All right, good. Next one, 28. Which of the following leadership styles is most suitable for an experienced and flexible workforce? And for me, I would say democratic. I would say democratic for the simple fact that democratic leadership includes the subordinates, includes the followers to be a part of discussions, decision making, and things like that. And if you would only trust the value, you only hold value in things that the workers say if you have them to be experienced. If they're experienced, then you know that they know what they are talking about. And so the only way they're able to show their level of experience and be able to be a part of anything is in democratic. Because if you have autocratic, paternalistic, all of them are almost the same. Constitutional, they're almost the same. This one, you treat them like children. You see yourself as a father, the leader sees himself as a father, and treat them like children. So in a sense, they're bossing them still. Autocratic, it's all about a boss again. Constitutional, similar. Democratic, everybody, you trust your workers, and so if they're experienced, you'll be able to delegate and say, okay, you do that, and then you leave them to do that task, and they're able to work by themselves because they're experienced enough, and they're able to help you in the decision-making process because they're experienced enough. So democratic. 29. Mary works in a small supermarket. She thinks the pay is good. While she enjoys the group of friends she works with, she is considering leaving because she feels that her work is not appreciated and is not challenging enough. So I have two issues right there. It is not appreciated, not challenging enough. According to Maslow, which of the following reasons best explain Mary's desire to leave? And so they say social needs are not being met. That cannot be true because she got good friends at work. So her social needs are being met. None of her needs are being met. That's not true again because she thinks the pay is good, so security right there, because she could buy her basic needs. She enjoys a group of friends, so social needs are met. Lower order needs are not being satisfied. The reality here is the lower order needs are being satisfied. So social, psychological, because she gets good pay, they are being met. What is happening here now is that her higher order needs are not being satisfied, and that's because you can see she's not appreciated, right? So she don't have the peers don't, she feel like she's not appreciated on the job, and it is not challenging enough. So there's no self-motivation, no self-actualization. And so if we go to Maslow's hierarchy, we'll see what we're talking about. So if you look at the hierarchy here, psychological is being met because she's getting paid good. Safety, she's comfortable where she is, she ain't complaining about that. She good. Belongingness, of course, she get along well with her co-workers, so it's there. Esteem now. Esteem is not being met because what is esteem needs? This need includes a desire to have a positive self-image, status, recognition, and appreciation by others. And clearly she said she doesn't feel appreciated, so that's the higher one is not being met. And then we have self-actualization. This is the highest category of needs. It is where the employees feel a sense of fulfillment, and the job is not satisfactory to her anymore, not challenging, so there's nothing to fulfill right there. So that's why the answer is C. Number 30. At which level of Maslow's hierarchy of needs would open and honest communication among employees be applicable? And for me, I would put the social, because the social here say the social needs here are belongingness or social. Employees want to feel accepted by their peers, to be loved, to have a long-lasting friendships, and to be part of a group. They yearn to socialize with their coworkers and have good relationships with both peers and supervisors. And so we're looking at right here. He has to be social because you want to be able to be open and honest and talk to among employees. So that's a social aspect right there. All right, good. Now, the safety is normally, workspace, feel mentally safe, you feel physically safe, esteem, as I said before, we looked at it before, being recognized, appreciated, self-actualization, being fulfilled. So it's social for this one. 31. Which of the following is not a current liability? So we're into accounts now. Which is not a current liability? And so the answer here we circle is mortgage, right? Because what? Most mortgages are for like 25, 30 years. So it cannot be current. You owe them, yes. It's a liability, yes, but it cannot be current, right? Because all of these are short term. Expenses owing, you have to pay the people. Bank overdraft, you have to pay back your bank, or else interest and and then creditors of goods, you gotta pay the people, right? So mortgage, you can wait a little, it's a little longer period, 25, 30 years. That's why it's not current. 32. The three main components of a cash flow statement are D, operating activities, investing activities, and financing activities. All of these involve something with cash. Operating activities mean you're going to spend the cash. Investing, you're going to spend it to return later on. And financing, of course, again, spending. All right, so all of them involve cash. Shares is not cash, so that would be out. Funds flow, that's not a part of it. We have shares again, that's not it, so that's out. 33. A type of external finance which offers flexibility and the ability to access funds over and above bank balances is known as, and once you have over and above, then we're thinking overdraft for this one. Over and above, we're thinking overdraft. We know a standing order is when the bank charges when you put in place something that takes out the same amount of money every month or every year, whatever, for a particular reason. Trade credit, that's not anything to do with the bank, that's the suppliers and things like that. Leasing, totally not leasing. That's not leasing about. So overdraft is the only one that fits this definition. Overdraft, you go to the bank and you can withdraw more than your bank balance, but you have to pay it back, of course, with interest. 34. Working capital is often described as the lifeblood of a business. Which of the following options best describe proper management of working capital? This is true, lifeblood of the business. If you don't have any money coming in, or it's not flowing properly, business is in trouble. And so we have C, improve cash flow forecast. And of course, right off the bat, you can tell, because if they say working capital, you need the monies to be in the business. You need cash flowing in and out of the business. So you have to do your forecast, and if you do it properly, you'll be able to budget and understand what is what. You'll get a better understanding of how your money is going to come in, when you were able to expend some money, when you expect revenue, things like that. So C. 35. Which of the following is not a component of working capital? And again, the answer is D. Why? This is actually fixed. All right, the building doesn't change depending on the level of production, but most of these other things, they tend to change based on the level of production, and they can vary. But this one, the building, it doesn't vary. It's not working capital. It's actually fixed capital. All right, 36. One primary risk associated with bond is, and of course, B, the interest rate. Because based on the bond that you took and the time period and what's happening, if you borrow it at a certain amount and the interest rate go up or down, then that would impact the value of the bond. So the interest rate is the biggest risk when associated with the bonds, because it can actually become junk bonds and then it's worth nothing, losing money just like that. So that's why you have to keep an eye on the interest rate. 37. Which of the following ratio gives a measure of how easily a business could meet its short-term debt or liability? And so you have the answer here being B. Why is it B? Because liquidity would tell you how soon the business can turn certain assets into cash. And here, if you have a lot of liquid assets, then you can easily get the cash to pay whatever debt you might have in the short term. So if you have cash on hand, take the cash, pay your debt. You have something that can be sold quickly, pay your debt. So that's where it's liquidity. If you had a lot of assets and resources tied up in buildings, expensive buildings, and 30-year bonds and those kind of things, then you can't really pay that readily. 38. Which of the following sources of finance is least likely to be used as investment in a new product development? And so you have the bank overdraft. Why we say that? Because product development would take a while, and bank draft is only for a little short span of time. So maybe this week you can't meet the payroll, you might overdraft, come next week you will pay it, things like that. So the bank draft is a little quick solution for something, for a little cash win for a shortfall or something. But the bank loan can go for years. Debentures normally come mature after a few years. Share issues. Now this one means that, well, again, long term, right? Sometimes you don't really want, people wouldn't even buy shares unless they believe in the company. But you can issue shares to help develop new products further, because they do it all the time. When you see a lot of businesses go public, you see Uber and whatever else gone public. Now they go public when sometimes their product is still in development and they want the extra cash to push them over into full-on production. Right? So bank draft, just too short a thing for that one. 39. Ms. Till and the accounting manager of XYZ Company Limited is in the process of assessing the profitability of the business. She is comparing profit with the capital which has been invested in the business. Which of the following ratios is Ms. Till using? So if we're talking about profit versus investment, we're talking about returns. So return on capital employed. So that's D. We're talking about the returns of what your investment, and so the best answer is D, return on capital invested or return on capital employed. Number 40 refers to the following. The owner of a company withdrew from the company goods worth $100 for personal use. Which two accounts are required to post the transaction? And so the answer here is D, purchases and drawing, because you're pulling from the owner's equity and you're also pulling from the company. So that's purchases and drawing. So that's D. 41. Which of the following is not classified as a current asset? Similar to the current liability we had above, current asset. No, it is not a current asset, which means all of the others are current assets. So we have stocks, debtors, cash at bank, and bank overdraft. And so you realize all of these, yes, they are assets, but the bank overdraft is not classified as a current asset. Because if you realize from the four options, the bank overdraft is actually a liability because you have to pay back the bank, a current liability because you have to pay back the bank in a short term. So cash at the bank, that's an asset for sure. Debtor, somebody owes you, and so that's an asset in a sense. And then stock, of course, that's your stuff right there, your inventory, that's an asset. But the only one here, bank overdraft, is a liability, meaning that you have to pay back the bank. So it's a liability. 43. Sally is completing her assignment on investment appraisal method. She is applying the method that allows for discounting all future cash flows from a project to the present day value and then subtracting the current cost of the projects. The method Sally is using is net present value. Net present value. Because when you're looking at time frame, this is the only one really that looking at the time frame. But so it's B, net present value. You want to know what the value is now after doing all of their calculations. 43 refers to the table which shows an extract from the book of PBs Limited. And in the extract we have net cash inflow from operation 46, tax paid 12,000, payment of fixed asset 19,000, shares issued 13,000. The closing cash balance is, and so the answer is C, $28,000. $28,000 is the closing balance. Now, how did we arrive at that one? Well, we look at the 46, that's the net cash inflow for the operation, good. And then you minus the 12, So the tax paid, take that from that. And then you minus the 19, payment of fixed assets, minus that. And then you add back the share issue. Because if you sell shares, you're going to be making back some monies. So you add that back to this whole thing. And so when you do all of that, you end up with the $28,000. So we run it quickly in a calculator. 46,000 minus 12,000 minus 19,000 equal 15,000. Then you add back the 13,000 and you get the 28,000, which is C. All right, 44 and 45 refers to this. So we're at the end basically of this paper. So let's just get it done. Okay, good. So financial variable, budget, actual performance, variance. Remember, variance is the difference between the actual and the budgeted. So let's go. Sales revenue. The budgeted was 15,000 and the actual was 12,000. What is the variance? And so the answer here is, of course, did they ask for that one? Yes, the answer here is A, 3,000. And it's adverse. Why is it adverse? Because I know normally you say, now people would say when actual is less than budgeted, that's good. But that only applies for certain class, such as costs. When it comes to revenue, what it means is that your sales forecast was low. Your sales dropped low of forecast. And that is not good. And that is always an adverse variance because your sales actually were less than the budgeted. And so that can have severe impact on the company. Your sales are less than the targeted. So that's a negative, adverse. The 5, the last one, the variance for overhead costs for Quick Cook Limited is, again, is A, 500, but this time it's adverse too. It's also adverse. Both of them are adverse, even though the scenarios seem different. Because if you realize that for overhead costs, it's higher than budgeted. The actual for sales is lower than budgeted. So when you come on costs, when the variance, when the actual is higher than budgeted, that's adverse. When it's sales now, when the actual is lower than budgeted, that's also adverse. So for this one, it's 500 adverse, meaning you went over budget in terms of costs, right? Something is too expensive. Maybe current went over out of hand. Something is too expensive. Good. So we have come to the end of the Unit 1 2013 paper. We have completed the Unit 1 2013 paper 2. And now we have completed the Unit 1 2013, MAYJUNE 2013 paper 1. Alright, so that's it for now. That's it for this particular video. You know what to do. Like, subscribe, hit the bell. Thanks for watching. Thanks for listening. Stay tuned for more.